Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the week report for the week ending on April 3rd, 2015. A slightly later than expected report due to the long weekend and family obligations, Easter Sunday. So, my apologies. Let me get straight to the markets here. We have had an extremely volatile, turbulent, and choppy weeks. In fact, weeks. And there is no doubt that trading these extremely volatile market has been frustrating, difficult, and to say the least, somewhat impossible. Saying all that, we have had some terrific winners in between, and I'd like to point out that active, disciplined, focused, flexible, and courageous, my favorite terms, clueless say traders did manage to make some very decent profits on select Clueless 8 picks and recommendations. Keep in mind that in extremely volatile markets, as you can clearly see, as exemplified in this chart of the E-mini futures behind you, as I start my broadcast, my video cast, that it is really a extremely volatile and unless you are stuck to your screen or multiple screens, I would say that if you're trying to be a short-term trader in the market or day trading as we call it, then highly it's highly advisable that or suggested I should say that you keep your eyes on the screen. This is not the type of market, mind you, where you're going to have a linear pattern or a straightforward directional bet that just works out on your time. It just doesn't work like that. I've always been a straight shooter when it comes to this type of, in my service, which is going to be a year old on April 15th, 2014, 2015, in 2 weeks' time, a little less than 2 weeks' time. And keep in mind that I've had some very serious wins. My forecast has overall, not 100% of the time, obviously. But overall, a majority of the time, a good 70 plus percent of the time, has been dead right. And I've had multiple direct hits, as I like to call it, on short-term forecasts as well as longer-term swing forecasts on the markets and individual stocks. But saying all that, I'd like to remind everyone that the type of extremely volatile, and a key word, volatile markets, which is a new normal, that we all have to get used to. Either we embrace it or we get destroyed by it. It's really as simple as that. So the reality of the situation is there's a lot of money to be made, in my opinion, if somebody is actively trading the markets or actively keeping swings and taking profits on days that the market is gang rushing up 200-300 points and then buying them down 200-300 points, and of course within quantifiable chart parameters that I keep on showing on a daily basis, and engaging with my members and free trial subscribers on a constant basis throughout the day. To saying all that, let me get straight to the markets and like to point out to everyone that this is an aggressive market and it demands aggression by traders. If you do not want to be aggressive in this market, you do not want to take risk in order to trade, then do not trade. There's ample opportunities where you can sit on stocks for months and months and make a decent sum of money. But if you're going to go for those 2, 3, 400% type of moves on the market on a couple of times a week or whatever, or with a smaller sum of money, whatever the case that you trade with, then you'll have to take risk. And just the way it is. And I pinpoint some very short-term directional bets which do work out very well. But again, I might be off by 24 to 48 hours. And if you don't manage your trades, keyword, manage your trades for that week or move it out to the following week if they're weekly calls or puts, then obviously you're not doing it right. Saying all that, people, I believe a bunch of members have been helped tremendously by our advanced coaching session that we have put together in place to help our members, to be honest with you. And it's an hour-long session, which normally tends to go over an hour and a half minimum, if not 2 hours. I don't charge for. I'm not clocking anyone, and I'm not punching the time card. Okay, and people who have done it, and we have taken the time to do it with them, and I go ahead and explain all my charts. The basis, it's chart analysis. I'm sorry, chart reading analysis, and then chart construction and other stuff that goes with it. They'll tell you straight out that it's an extremely helpful thing. At the same time, if you need help in setting up platforms, in setting up actual parameters for your risk management or your trade management, my tech admin, Saim Shogun, is brilliant at that, and he works with members to do that too. That's all within the framework of the advanced coaching sessions. And if you decide to do multiple sessions, of course, there is a discount available. Standard stuff. But I think it's extremely helpful that when people do that. Okay. And of course, platinum members do have their hour-long session, which doesn't always entail screen sharing and such, which is certainly the case within the framework of the advanced coaching session, where we screen share and I walk through everything. Um, and like I said, all that is available to everyone. And we will be introducing other helpful features down the road, webinars and stuff included, as we normally do, to help people survive, make money, and become successful traders. This is not an easy market. I get punched too in the face by the market. So what? I get up and I punch back and I win. That's just the way it is, okay? All right, so let's take a look at what's going on here. First of all, on the headline side, we had a terrible number on Friday morning. Futures were trading till 9:15 and bang, they dropped hard, right? So at this point in time, this is what we see on the daily. Now, I have a prediction, and this is my forecast. Right or wrong, I'm going to follow it. And of course, I'm going to change my message depending on what Mr. Market is telling me. So saying all that, this is what I see happening right now. We have a pattern, which I've shown many times. This is the uptrend line going back to the lows of October 15, 2014, which I show as a pivotal low at this point in time. And this is where we are. Now, if you look at this, this is certainly a head and shoulder where you have a head, you have a left shoulder, you have a right shoulder, and now we're here. Now, what are the chances that and these be the E-minis, you will obviously have to take into account that if you add a couple of points, probably 7 points or so, you arrive at the actual number for the S&P 500. So here we are, this support line here, that's around 2032, which I've highlighted many times, and the 2030 level, let's say, is around 2037 on the S&P 500. So that should serve as support. Now, some of the finest Elliott wave theories, such as the person that I mentioned quite often in my nightly reports, which is Tony Caldaro, and these guys are brilliant, and he's a brilliant guy who's been doing this for much longer than I have and understand the mechanics and the wave theories and the Elliott analysis and all that stuff. Said the same thing, that 2035 or thereabouts is basically short-term support, 2034, 2035. So that's what I see here on the E-minis too. So saying all that, this particular triangle, as I like to call it, I believe holds for this week. Now, I could be very wrong, and we could very well close below 2030. Keep in mind, that's the short-term pullback scenario, hardcore pullback scenario. Futures are showing down 14 right now, as we know. Nothing to be alarmed about, in my opinion. And then if this line holds, which is the 2030 level, and of course I'll be watching it like a hawk starting very early in the morning. If this breaks, then we're going down to 2000. It's really as simple as that. If the 2030 breaks, that's about 2035, 2034, around that level or so. 2033 here. If this breaks, then we're going down to 2000 on the S&P and 2007. I would say about 2000 to 2007 on the S&P 500. It's really as simple as that. These are the large Bollinger acceleration bands that are in play here. So once it breaks there, there's going to be alarm bells going off like, oh my God, it's over. And of course, if we break this hard for whatever reason, then we are going to come down to about 1960 level. This should contain the massive dramatic fall and complete a very large wave. However, short term, I'm looking at this support holding and a bounce above that, and I think this could be a buying opportunity tomorrow, even if we slip a couple of points below that. Now, Why do I say that? Well, I'm looking at some simple observations. I am looking at a very defined um, let me get my chart tool. I'm looking at a very defined oversold level here, short term, of course, everything is at this point, and where we are looking at a stochastic extreme oversold situation. So a bounce up, like it normally does, a bounce up where it gets overbought again, a bounce up here would bring us back towards what I've been talking about quite a bit, which is somewhere in the 2080 or 2090 level if we are lucky. Okay, so 2080 would be about 2085 to 2086 on the S&P 500. So again, a sharp bounce up here where we get severely overbought towards the 100 level would bring us up to about the 2093 on the ES. And at that point, we fell. Okay, so that's my opinion. Do we get up to this 2126 here? I don't know, and I doubt it. I don't think the market's ready right away to go ahead and retest those highs, given the technical damage that we have had. Keep in mind that I do not have a crystal ball, and I don't control the market, so I have to give you the most appropriate message that I think that I am seeing out there. So saying all that, let's take a look at the shorter term chart. So that's one. Number two, if you look at the vortex indicator, you're going to see that despite this very large drop, we do have a positive divergence because the last time we were down here in this 2035 level, and that's pretty close to where we are right now on the E-minis. Then look what this was. This was down to 0.72, and look where we are right now. We're at 0.95. So if you want to look at it from a standpoint of a positive divergence, then it's certainly the case. It's very easy. It's a 45, it's an upwardly, it's an upward sloping line, and even though what we are seeing here, and again, you have to really use your brain a little bit to understand this stuff. It's not that hard, trust me. And so we are pretty much at these same levels, but this time, that last time we were down here, and now we are here. So that's considered a positive divergence in play. And this is on the daily charts, mind you. Now let's take a look at the 1 hour, which is the trader's mark, I should say. And at that point, we start to see some more interesting things that are taking place underneath the surface, known as the internals, which I explained in my advanced coaching sessions too. Very simply, this is the vortex indicator. I use the Arun, I use the stochastics as a quick look, and I don't get too deep into this stuff. But again, if you look at it here, I would say that the last time we got down to was these levels, and this is a very strong level of support right here. And I believe at the open we might very well test that. Look where we went to. So these are pattern similarities that I want to show people. Um, and there's another low here. I need more desk space. Another low here. And look where we're back there again. Now, unless we have a complete breakdown and entering a bear market right away in April of 2015, which I highly doubt, and for macro global reasons that all the facets of other than a weaker job report because of a minus 50 degree, well, I'm exaggerating, a freezing winter in the Northeast and elsewhere, crimped economic activity. It's not rocket science to figure out that the numbers, that job growth was going to be slow. I don't know how the heck they were expecting 245,000 new jobs created when you couldn't even leave the house. So, you know, again, common sense sometimes has to should supersede these idiotic estimates and stuff that economists put up there, and then get disappointed because we created 126,000 jobs. I mean, big frigging deal. The U.S. economy is not coming to a standstill. Over the weekend we were out, and you know what? There's enough people out there shopping, and economic activity is pretty brisk. So again, housing numbers and stuff included were pretty strong. And those are all going to be reflecting going forward. So I'm not being illogically bullish, but anybody who expected 245,000 new jobs created in the middle of the worst winter in God knows how long really needs their heads checked a little bit, in my opinion. So saying all that, stochastics also very quite oversold. If you look at the vortex, similarity, the bounce levels here. Um, And so on a short-term basis, and that's what I'm looking at, and I'll be very much on my toes this week. I am expecting a move up. Best case scenario, a move up to is 270. Best case scenario, we get up to 280 around that level. Okay, which I've showed before, and we come down and test this level first, and of course we break this. I showed you before what happens. So this is certainly a head and shoulder with a head and a right shoulder and a left shoulder.